Hey everybody, welcome back to another edition of 3 Question Thursdays, where I cover 3 questions from NRIs who have commented on my YouTube channel in the last week. So let's get started. The first question that I have here is, hello sir, I used to do options trading when I was in India. Now I have become an NRI. Can NRIs do options trading with monthly expiry? This one is a great question and I get this question asked frequently. The short answer is yes. As an NRI, you can indeed engage into option tradings in India, including contracts with monthly expiry. But there are some important rules and restrictions that you need to be aware of. As an NRI, you are allowed to trade in futures and option segments in Indian stock exchanges, but you must use rupee funds held in India on non-repatriation basis. This means you will need to use an NRO-Non PIS account for these transactions. So here's the process that you exactly need to follow. First is you will need to obtain a custodial participant, which is CP code, or use a PAN-based identification method. You can also trade using your NRO account through a properly mapped trading account. Your NRE account typically won't work for this process, as generally only equity delivery trades are allowed for NRE accounts. Now there are some important restrictions that you need to keep in mind. First is that NRIs are prohibited from short selling and intraday trading into equity markets. Intraday trading in FNO is, however, allowed if you have the valid CP code that I talked about. You cannot pledge your securities and take a collateral also for doing this FNO trading. Now, these requirements can vary slightly between brokers, so I recommend speaking directly with your broker to understand their specific process for NRI options trading. The second question I have is, hi Alok, I am from UAE. What happens to my existing mutual funds after converting to NRI account? How to transfer my current MF units to NRI account? See, when you transition from a resident status to an NRI status, your existing mutual fund investments can continue, but they need to be properly redesignated as NRI holdings. And for that, you need to follow certain process. First, you will need to update your KYC details as a new NRI status. This typically requires your passport with a valid visa or a permanent residence permit. You need an overseas address proof along with your PAN, your photographs, and also a FATCA declaration, which clearly specifies your tax identification number. Next, what you'll need to do is you need to open an NRE and NRO account with an Indian bank. Your existing mutual funds which were purchased while you were a resident would typically be held now under an NRO account. So you will have to do a bank updation process. That is where the redesignation process comes. You will need to submit this form to all the AMCs where you hold these mutual fund units. Some AMCs have specific norms for NRIs in this purpose. The request tells them to typically update your KYC status and your NRO bank account into their folios. So it is important that if you have any existing mutual funds that you purchased as a resident from your NRO account, you need to update your non-resident statuses there so that you don't face any challenge while withdrawing these funds in the future. This typical process usually takes around 1 to 2 weeks to complete depending on AMCs. So I strongly recommend that you work with your existing advisors or your bank directly to get these things updated in your respective folios. The third question and the last question for today is, hi, I am an NRI and I already sold my property without TDS deduction. That too in 2022. What should I do now? Is there any way to pay taxes now? This is actually a serious compliance issue that needs to be addressed promptly. Under the Indian tax laws, when an NRI sells property, the buyer is required to deduct TDS, which is tax deducted at source, before making the payment to the seller. Now, since the TDS deduction was missed in 2022 and some almost 2 years have already passed, here's what you should do. First is you should file an ITR return declaring your capital gains from the sale of the property if you haven't done that already by paying the right penalties, and please ensure that you do that before the due date. Second is you need to properly calculate these taxes. Now, if you had owned the property for more than 24 months, you need to use the long-term capital gain tax slab. And if it was less than 24 months, you need to use the short-term capital gain taxes slab rate. Once you are done with this, pay the rightful taxes with whatever penalties and interest gets accrued. The interest is typically calculated as approximately 1% per month from when the tax was originally due. Now, like I told, there might be penalties also for this non-compliance. The income tax department can impose these penalties for failure for complying with these TDS requirements. Now, given the complexity of your specific situation, the time has already passed and I strongly recommend that you consult a tax professional, get these things sorted, because not only you, your property buyer might also have received problems. And just make sure that you keep on checking your ITR portal to see if you are already getting any notices around that or not. The good news is that voluntary compliance is always viewed as a favorably good thing when any scrutiny is being done by tax authorities. So if you do that voluntarily, it will be good for you. So I guess that these are the 3 questions for today. If you have any more questions, I would want to answer them through a video. So please leave them in the comment section below or send to us directly through our WhatsApp channel. I'll see you in the next video. Thank you.